This is just the beginning. Let's go back to 2023, not ancient history. 3 banks failed. Silicon Conman Bank, Signature Bank, First Republic, boom. Down go the equity markets, way up goes gold. 3 banks? How about 300 banks now? Well, again, one of our top trends for 2024 would be a golden year for gold. Gold prices went up 25%.
Trouble is cooking for the U.S. economy, as the country could be on the brink of a major financial crisis, based on the recent symptoms around the corporate sector. Last Friday, the FDIC took Chicago, Illinois-based Pulaski Savings Bank into receivership, marking the first bank failure of 2025. The first bank failure of the new year came much earlier than in 2024, when only 2 bank failures occurred throughout the year. American trend forecaster Gerald Celente points out the 2023 bank failure as a warning sign of deeper financial instability. He suggests that if 3 banks collapsing could increase gold prices, a larger banking crisis could send gold soaring even further. The yellow metal, as it has been referred to for decades, is on a roll through as the fundamentals continue to suggest that the bull run for gold is still in the early stages. In his assessment, Celente states that 2024 will be a strong year for gold and expects Trump to push for lower interest rates. He mentions Trump's past influence over the Fed, citing Powell's 2019 rate cuts after the 2018 market downturn. U.S. President Donald Trump renewed his attacks on the U.S. central bank hours after officials left interest rates unchanged, despite his public calls for them to cut. In a social media post, he accused the Federal Reserve and its chairman, Jerome Powell, of mishandling the economy, saying they had failed to stop the problem they created with inflation. Based on current trends, Celente warns that U.S. debt has surged, effectively reaching $220 trillion when factoring in unfunded liabilities. He notes that before Trump, the deficit was around 3% of GDP but has since soared. When combined with dovish central bank policies, large and rising government debt burdens can significantly enhance the appeal of non-yielding assets like gold as a hedge. As the U.S. national debt continues climbing, expected to surpass its GDP in 2025, this dynamic, Value Partners posits, is likely to provide a powerful tailwind for gold prices in the year ahead. Now, we present the clips of Gerald Celente's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, again, one of our top trends for 2024 would be a golden year for gold. Gold prices went up 25%. Here's the deal. We have said, it's in your trends journal, going back to November, and earlier that on different shows I've been on, we said Trump is going to do everything he can to pump up this economy. And in doing so, he's going to lower interest rates. What did he say at Davos? He wants the Fed to lower interest rates. All the media was saying that the Fed's only going to lower interest rates twice this year and that Trump can't force them to do what he wants. In the Bronx, we used to say bullshit has its own sound.
Yeah.
Let's look at the facts. Let's go back to December 2018 when Trump was president. Take a look at the Dow. Up. Had its worst December since the Great Depression, 1931. What did Trump do? He pushed Powell to lower interest rates, and he did it in January. Trump is in charge. The president's in charge of the Federal Reserve. And if you need any more proof, who was the former Treasury Secretary? Ms. Fatcha Brut, Janet Yellen. Yeah. What was her last job? And they got to bring the Treasury yields down because mortgage demand is way down. They got to get housing. Again, the sales of homes are way down. He has to do everything he can to juice this up. Of course, low interest rates don't change the mortgage rates, but the yields will come down, and that'll bring the mortgage rates down. Yeah. And exactly what you're saying. So that's what we see happening. He's going to lower interest rates. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go. Oh, now let's go back to the government debt. Yeah. It's what, about 6.6% of the U.S. gross domestic product. Before Trump got in, I think the debt went
the deficit.
It went way up under Biden. It used to be 3 point something percent of the GDP. And when you look at the real national debt, when you got to pay Social Security, all this other stuff that they owe, it's more like 220 trillion, not 36 trillion. So that's the other thing. Will they come out with a digital coin? We're getting away from that dirty cash. We're going to digital trash. CBDC. Trump says he's not going to do it. But again, he says one thing and does another thing. This is just the beginning. Let's go back to 2023, not ancient history. 3 banks failed. Silicon Conman Bank, Signature Bank, First Republic, boom. Down go the equity markets, way up goes gold. 3 banks? How about 300 banks now?
Gerald Celente warns that China's advancements in AI, particularly Alibaba's new model, could disrupt the tech sector. He emphasizes that China is developing AI at a fraction of the cost without relying on NVIDIA's high-end chips, which could severely impact the Nasdaq, potentially leading to a crash similar to the dot-com bubble. Enter DeepSeek, a Chinese AI startup that sent shockwaves through the market by releasing a new, highly cost-efficient AI model. While DeepSeek may not yet be a household name, its impact has been swift. NVIDIA, the dominant player in AI chip design, and, as of this morning, the world's second-largest company by market cap, saw its stock price tumble after DeepSeek's latest model demonstrated an efficiency that many on Wall Street fear could challenge America's AI supremacy. On Monday, the tech giant lost an astonishing $590 billion in market value. Tuesday saw a rebound of $260 billion, only to drop again by $130 billion on Wednesday. Despite the rise of cryptocurrencies, Gerald Celente believes gold remains the top safe haven asset and would be nearly twice as valuable without it. He highlights the global shift toward digital currencies and worsening economic conditions in Europe, China, and the UK. Let's get back to the interview.
This is just the beginning because it's here. This is another article that just came out. They want it on the air. They have it here. No. They just came out with another, here, Chinese e-commerce giant Alibaba released a new artificial intelligence model on Wednesday and claims it outperforms its rival, DeepSeek. So now let's go back. Yes, we said this AI is real, just like we said the .com, but they're over-investing in it in companies that are not producing and more talk than action. But this thing is going to keep going. AI trends are born, they grow, they mature, reach old age, and die. We said the AI trend has just been born. But now what's going on? When you see the DeepSeek, what's costing NVIDIA, the other people making chat $100 million, they're doing it for $6 million. Oh, and they're not using those NVIDIA high-end chips that Biden prohibited, tried to stop to go into China. They're coming out with cheaper and less intense chips. This is going to crash the Nasdaq.
With 80%, you think? Just like during the dot-com crisis?
I don't know the number, but I'm just telling everybody, pay full attention to this because here it goes. Alibaba now claims its new AI model, Qwen 2.5 Max, and open source is even more impressive than that of DeepSeek. And I think this is just the beginning. If there were no cryptocurrencies, gold prices would be almost double what they are, easily. But again, to me, gold is still the number one safe haven asset. And but again, the world is going to go digital. I mean, you go to China, you put your hand out, you're paying for something with the palm of your hand. You know, there's no, everything's goes back to AI. Everything is becoming digitized. Everything. And there's no question about it. It's just going to keep expanding like that. And they're going to do everything they can. Oh, by the way, the European Central Bank just lowered interest rates again and got rid of their quantitative tightening. Yeah, because Europe's economy is in crap. You're looking at Germany, the 3rd largest economy in the world, is in recession. You look at the UK, and you could put an F and a C in that one. They're in dragflation, declining economic growth and rising inflation. You look at China. China destroyed themselves with their 3 years of zero COVID policy when they launched the COVID war in January 2020 on Chinese Lunar New Year, the year of the rat. They destroy their economy with 3 years of lockdown. And with all booms, there's a bust. So when Slimeball Clinton let them come into the World Trade Organization, which they officially came in 2 weeks after 9/11, you look at China's GDP before they went in. It's like this from 1970. They come in to the World Trade Organization and it skyrockets. They overbuilt the place. Depending on whose numbers you're looking at, there are between 60 to 90 million empty apartments. They overbuilt it, made a very bad situation worse by their 3 years of COVID policy where they locked down the country. So we're looking at the number. You're looking at India's economy now flattening out one after another. Was that the fifth largest, the fourth? I mean, you're looking at the America's the only economy that's doing decent.
Gold continues to challenge its all-time high set in October 2024, and many analysts believe the precious metal can reach $3,000 by the end of 2025. With growing financial instability, will gold continue its bull run as the preferred hedge against economic uncertainty? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.